out of Phoenix. However, today I am presenting from our Minneapolis office. I was doing some presentations with a group locally, and I do bounce around from time to time. So my background is in sales tax. However, I'm a trained auditor. I used to work for the Arizona Department of Revenue, and prior to that, I also worked for the Idaho Tax Commission. And today I am really excited to kind of go through all the different updates from Wayfair, talk about some of the things that we've changed in terms of like over a year post Wayfair, and then we'll start going through and digging into some of these slides after Kim and Bridget introduce themselves. So Kim, would you like to introduce yourself to the group?
Sure. So I'm Kim Hitchcock. I work for Eide. I'm a NetSuite Solutions Engineer. I too am located in Phoenix, and we actually have nice weather today. I was telling Laura. I've been working with NetSuite for about 8.5 years, primarily in warehouse distribution. Done a lot of things within the NetSuite space that's related to different verticals, and doing some implementation as well as consulting and the solutions engineer side. I'm going to talk to you today about how ERP platforms can help with tax and audit, and as well as anything new from the Wayfair ruling. I'm going to pass it over to Bridget for her to introduce herself.
Great. Thanks, Laura and Kim. I'm Bridget Merton with Avalara, and we are a proud partner with Eide Bailly. I've been working with Eide Bailly for over 3 years now, and at Avalara for about 4 years. My background is in technology, so I've been in ERP technology for over 15 years in automation, so excited to talk to everyone about how you can automate sales tax compliance. And I do have a fun fact today. This has nothing to do with sales tax, but I heard this on the radio. So today is at like 9:19 and 11 seconds. It's the ultimate day palindrome. It's 9:19:19, and then the time will be 9:19:11. So might blow your mind later today, but that's my fun fact. So more sales tax fun facts to come up later today. So we have one more chance. It happened earlier today, and it'll happen again tonight. So share that with your friends. Okay, I'm gonna hand it back to Laura.
Thanks, Kim. Thanks, Bridget. Okay. So, my favorite topic, NEXUS, Wayfair, sales tax, corporate tax, anything tax or state related. Anyone that knows me or has heard me talk about sales tax, I totally geek out over anything that has to do with legislative changes, taxability changes. It's like my TMZ. I'm not going to go through the whole history of how this changed. I'm just going to touch very briefly on it. The QUILL case, many of you have heard about it. I guess in 20 years from now, people are going to say Wayfair case, and QUILL is going to be like a thing of the past. The Wayfair case overturned the QUILL case. So essentially what really happened is, it used to be that when you're looking at this big circle right here, it used to be that not very many states had economic nexus for determining whether somebody has a filing requirement or not. A lot of the states only had physical presence nexus standards, and physical presence, which is still a thing, it's still out there. Physical presence is, you had a person there, maybe you attended a couple of trade shows, maybe you have a remote employee, maybe you have a building or a warehouse or some sort of asset in that state. Those would all be things that would trigger physical presence nexus. It's kind of a tongue twister. Now, Wayfair came in, changed all of our lives, and now there's not only physical presence, but there's also economic presence. So we're still in the world of the circle went from kind of smaller to now it's way bigger. So the bucket in which the states are saying, hey, you need to file and report to us, now they're capturing more companies. So that's really the only thing that has changed. In the past year, we've seen some legislative changes in terms of sourcing, and that's something that Bridget's going to talk about too. So sourcing is, where do I source my sales? From a corporate tax perspective, a lot of service-based companies sort their sales by bill to. From a sales tax perspective, it maybe used to be bill to, like I don't know how many years ago, but at least for the past 5-ish years, more states are moving towards destination based. And what that means is destination is all about ship to. Where did your product go? Where did your service go? Where is it actually, whatever you did or whatever you sold, where is it actually going? Where is your customer located? And that is how you source your sales. Exemptions and taxability, those tend to be the same year over year. There have been some pretty epic taxability changes, which I didn't put a whole bunch of those in these slides, but I am going to talk about some of the major ones for those of you that are in Washington. The NEXUS code thing, that's going to be kind of a game changer for you guys. And then collection and filing. So while we've moved into the world of Wayfair, collection and filing has kind of accelerated. And accelerated, what I mean by that is maybe a lot of companies were like, okay, we're comfortable in 3 to 5 states, and now where they have more filing requirements, you're in 15 to 20. Before I start getting into all the fun stuff, let me just go through the different types of NEXUS. Now there's more on here. These are just like the major ones I like to put. So affiliate NEXUS, click-through NEXUS, agency NEXUS, physical presence is obviously big, and then economic presence. These are all still in place. It's just that economic presence now has numbers associated with it. Some of you might be familiar with the factor presence thresholds, like California has always had one, or had one for a while on the corporate tax side, where if your gross receipts exceeded, I think it's, I don't know, 568,000 or something like that, they changed each year, then you would have a filing requirement. So the same logic and methodology is being applied to these sales tax gross receipts. I work with a ton of tech companies. Technology companies are one of my industries. I also do a ton with construction. They happen to be my favorite because they just can get really messy. So the messier, the better. And then I also do a lot with retail. But one of the things that I've seen, especially as I reflect upon the last 12 months, is that a lot of the companies that I do consulting with think, well, I'm not impacted because I just sell stuff online. Well, the traditional, I went on to, I don't know, a website, I bought something, I had it shipped somewhere. Yes, that's impacted by Wayfair. However, so are so many other things. Like, for example, B2B transactions. I think that gets missed a lot. That does get caught up in this bucket of the threshold. Business to customer, maybe you are a wholesaler or a distributor, or you're a fulfillment center or something, and you're sourcing all your stuff to there, but really it should be somewhere else. Digital content is huge. I mean, I can't even think the last time, I don't even know if I check my mailbox anymore, because everything comes to me electronically. If you're a company that's expanding your services from a digital perspective, then this also affects you too. And services. So a lot of companies will sell services, but it's online, or maybe it's through a website, or it's an annual subscription or a license, or etc. All of those things are taken into account. I don't do a ton with nonprofits, but I do work, I guess more recently since this change, with nonprofits, and this impacts them as well. So I've even had some government contract clients that are like, well, we work for the feds. I'm like, let's talk about that a little bit more. So some of you may have heard of what we call the Wayfair checklist. Now, this is a checklist that our Supreme Court provided. I'm sure it came as a result of different lobbyists and people providing suggestions of what the sales tax world looks like, or if you were to Google Wayfair checklist. I've had some clients say, well, this, like Arizona doesn't follow the Wayfair checklist. The Wayfair checklist was just a document provided by the Supreme Court. It's not something that the states have to follow. I can tell you right now, as somebody who's worked for 2 different state governments, that the states operate under their own sovereignty, right? Just because somebody says, well, this is unconstitutional, if the state applied that change from an economic nexus standpoint, and it impacts your company, like, there is no technical, like, safe harbor. Some states are like Arizona, there's going to be a push for a safe harbor within Arizona, but I think it really depends. Hawaii doesn't have a safe harbor. Everybody has different rules. And that's the part that gets really confusing, right? Is like, okay, what are the rules by each state? How is this impacting us? What are we supposed to do? The Tax Foundation is a nonprofit organization, which I think they're fantastic, and we get a lot of information and maps from. So this is one of their maps from November 2018. And this talked about, which ones follow the Wayfair checklist and which ones don't. If you look at this map just from a visual level, there's a ton of orange, and then there's a couple of greens, and then we got some red ones in there. And you'll notice that the red ones, Colorado and Louisiana, those don't comply with the Wayfair checklist. And does anybody know why? Not that I expect anyone to answer, but the reason why is because those are home rule states. And if you've ever had the privilege of filing a sales tax return in Colorado or Louisiana, then you understand the pain of Denver does it this way, little Colorado, Littleton does it this way. It's all different. They have different forms. So this map is just to purely show people every state does it different. And a lot of times you can get caught up in, well, my home state, like Oregon, well, they don't have a sales tax. Okay, well, they're getting ready to have a new gross receipts tax next year, but you just have to be really careful. So for those of you that are accountants, the sales people that are going out and pushing new business, which is great because it helps revenue, you need to be in contact with them, because you want to make sure that, if we're going to enter into a new location, what happens? What are you going to do? This map, I made it 20 different colors and shades to kind of make a point here. So the map we just were on is what it looked like in November of last year. This is what it looks like now. All these little circle things at the bottom right corner, I don't expect anybody to read those. It's just that these are all the different thresholds the states have activated. Idaho recently changed theirs. They came out with one thing, then they changed it to something else. Arizona, which is state I'm based out of, decided to do a tiered thing. 1 year it's 250, the next year it goes down, the next year it goes down. Nobody else is doing that in the US. So if you're trying to figure out where should you file or what should you do, just from like a litmus test standpoint, it's really hard to figure that out, because you have to look at what you've done for the past 12 months, then figure out, okay, where do I source those things? So this is my little rhetorical question here. So being from Arizona, we have an Arizona contractor that does a project in Washington for 30 days. Now Washington is they have an economic threshold of 100K, and they also have that fun business and occupation tax, the B&O tax. If we have somebody they're based in one state, they go to another state for a period of time, their contract's over 500,000, do they have NEXUS? Yes, they absolutely have NEXUS because they exceeded the threshold. I get a lot of questions of, well, it was just one job. So if you are in a business that tends to be cyclical or contractual based for a set period of time, and you don't know if you're going to enter into that state again, I would say, here's Laura's textbook answer of, yeah, you have NEXUS, and yeah, you have to file, and you probably owe tax because Washington taxes everything like South Dakota. But what if it was one job and you're never going to do it again? That you know of, that you're aware of. It was like a one and done. Then I would say, you'd kind of have to look at the materiality of whether it's worth filing. Another question I get a lot is, and this is everybody's favorite state, California. A lot of companies are a little bit nervous to do business in California, or at least enter into California, just because their tax laws can get so crazy. So you do something in California, do you have NEXUS? The answer to this particular slide is no, you don't have NEXUS because you didn't hit the economic threshold. But if you spent time there, most people don't know is that California has like a de minimis one. So let's say you attended a trade show. Maybe you're there for a week or two. Well, California says, well, if you did a trade show, 5 times out of, I don't know, 3 years, then you're under the threshold. So there's different caveats. Every jurisdiction is going to be different. So that's something to consider. Let's do our first polling question. So this is going to be true or false. There are generally 2 types of NEXUS which describe the constitutional limit with which they associate. Perfect. Yes, true. There are generally 2 types, which is the physical and economic presence, even though I didn't list it on here, but there is such a thing as cookie NEXUS. But we won't get into that today because I don't want to scare everybody. All right, I don't know if we have anyone on the presentation that is an Amazon seller, or maybe you're a company that's thinking about becoming an Amazon seller. I just want to talk to everybody a little bit about this. So there's such a thing in this new world of Wayfair and economic presence and all these funny words, that now there's the marketplace platform, marketplace sellers, marketplace facilitators. So if you were to Google this on Amazon, or maybe you are an Amazon seller, if you are part of the program which Amazon moves your inventory on your behalf, and you use Amazon as a marketplace facilitator, Amazon has started to comply, and that's what all these dates are. With these different effective dates is that you are selling on Amazon your product, right? Amazon's moving your inventory. So in states like Alabama, starting at January 1 of this past year, they are collecting sales tax and remitting it on your behalf. So if the only revenue stream you have is coming from Amazon, then you wouldn't need to file in Alabama because they're doing it for you. Where we find issues is if you have an online platform through like Magento, or end user like myself could go to your website and buy something. You have to, as the company, have to figure out, wait, does Amazon sell my product, or does another marketplace sell my stuff through their platform, and are they collecting on my behalf? One of the things that's really interesting is Amazon is kind of known in the geeky tax world as being a little bit of like a strong arm. So in California, and this is I guess public knowledge, California had gained access to Amazon's seller list. So what you see a snippet of here, this is an actual letter from one of our clients that California had sent and said, hey, we know that you're shipping into our state because we got, air quotes, we got the Amazon seller list. You put the wrong start date on your application. And this is just one example. We've actually had several clients. We're like, okay, well, we're just going to put a whatever start date. They're not going to know. So California has had access to when people started selling and moving their inventory through Amazon. So if you go in and do an application and you put the wrong start date, what I have heard is that they're making a list of all those people and or companies, and then sending out letters saying, hey, you put the wrong start date. We now want returns from the right start date, or there'll be consequences, right? They send out that letter. My suggestion is, if you are an online retailer or you're considering doing anything with Amazon, is that you need to consult someone in your accounting group or a SALT professional, because it's great from a revenue standpoint. It will kick up your sales like you would not believe. However, it does have different tax consequences. It's not the end of the world. You just need to make sure that you're filing in all the places you're supposed to be and you're doing what you're supposed to do. So California has a good pulse on that. There are other marketplace facilitators. In fact, there's thousands of them. Alibaba, which I believe is now somehow affiliated with Yahoo. I should know that. But Amazon, eBay, Walmart.com, I mean, they are huge. There's just a ton of them. These are just some of the bigger ones, but there are other ones. I've seen ones for wine. I've seen ones for different types of food. I've seen all sorts of things. So if you are a third place seller, or you sell your stuff or services, could be services, through digital products through another third party seller, you need to make sure that hopefully the third party seller's in compliance, but also that you're in compliance from a filing standpoint. So really figuring out where you have NEXUS is something that, if you haven't done that already, I would really encourage you to do and look at. So that's the marketplace facilitators. So here's my checklist. If I could just get a message out. The first thing you always want to know is, do I have NEXUS? Do not automatically assume that you do unless you hit what I call the trifecta, which is revenue, people, property. Do you have NEXUS? Yes or no? If it's no, you do nothing. If you have yes, you have NEXUS. Okay. Is there a marketplace facilitator in your business model? Do you work with one? Are you one? That type of thing. Registration. Do you have to register in the state? Do you have to register in all the cities like Louisiana and the parishes? You have to figure out, when do I file? How do I file? Can I file once a year if I have $50,000 in tax a month? Probably not. And then the biggest thing that I get questions on is, am I going to collect at the right rate? And that's something that Bridget's going to touch on, but collecting the right rate, Google is a great resource for everything, but not that. One of the last things that I kind of want to go through is figuring out when your NEXUS starts. So maybe you triggered NEXUS, but your start date might not happen until October. So like Texas, for example, their threshold is 500K. You could be without hitting physical presence, right? Maybe you're a Colorado company, you've been doing, sales contractually into Texas without triggering physical presence. You don't have NEXUS yet because you haven't triggered, you may have triggered the threshold, but you haven't triggered the effective date. And you're probably thinking like, well, Laura, how do I know what all the effective dates are? There's a list. It's on one of these slides. If you go to the Eide Bailey website, we actually have a list of all the states' thresholds and the effective dates, and I'll be more than happy to share that with anyone. Here's my cheat sheet checklist anytime you enter into a new state. If you're one of the lucky people that has to get everything together, you have to register with the Secretary of State. You got to make sure you do payroll. There's some places that have head tax reporting. That's a big one. Look out for B&O, look out for unclaimed property and business personal property. These are all good things. Like this 8-point checklist is also good if you're thinking about acquiring another company because they could have outstanding liabilities. One of the things that I do want to talk about, I should get rid of Amazon. This is just for any online seller, is that your inventory in certain Amazon locations will trigger where you have to file. So if they're moving your inventory, you have to file. If your inventory is moved by you, you only have to file in the places you have NEXUS. Amazon, I think about 7 or 8 months ago, created a special report that you can pull through the system, as most companies do. You can pull where you have inventory, where it's moved, that type of thing. I would suggest looking at that and figuring out, because inventory creates physical presence within a state. On the corporate tax side, if you're worried, oh gosh, if I get a sales tax license in New Mexico, do I have to file a New Mexico corporate return? Or, what if I start doing stuff in Maryland? Do I have to file, if I get a Maryland sales tax return, do I have to file corporate tax in Maryland? So the answer is yes, maybe, probably, I don't know, it depends on the situation. These states right on the screen right here, these are the ones that have factor-based NEXUS for corporate tax. I know that's a mouthful. But what this is think of the economic NEXUS threshold for sales tax, but this is on the income tax side. So Washington B&O, Ohio CAT tax, Michigan tax, New York tax, some of these might look familiar. Does anybody know that Oregon is going to have a new CAT tax on top of their tax already? That's coming next year, but it's only for a certain threshold, kind of like Nevada's commerce tax. It has a haircut level. Market-based sourcing states, I mentioned sourcing before. There's quite a few states, Indiana, Colorado, New Jersey, that switched from cost of performance to market-based. Now, this only really applies to like service or intangible sellers or companies. So these states say if you have a customer or a client in our state, you have to source your sales there from an apportionment standpoint. So that's something to look at too. I do know for a fact there are at least 5 states that in this next coming legislation are going to be pushing to be market-based, because all the states are really hungry for revenue. They want everything to go to their state. A couple of things that I want to touch base on is best practices. Being an auditor, I can tell you, or a previous auditor in another life, keeping good documentation, there is no substitute for keeping good documentation. It is amazing, and it will help you in the event of an audit. And then if you're a contractor working with subs, vet out your subs, or even vet out people that you're doing B2B with, because if they're supposed to pay tax and you put it in the contract and they didn't, the state doesn't care. They'll go after you for it. Look at new jurisdictions before you put in a bid or you enter into a proposal or something. That's just pre-planning on the tax side, because you would never want it to cut into your margins, so it never hurts. Talking to your tax department, that's always really important, especially if you are trying to figure out, okay, we're going to start doing this type of work, it's new, how is this impacting us on the back end when we have to do filing? And then just planning is there's no substitute for that. Here is a snippet of the chart that we have on the Eide Bailey website. I think if you were to hop onto eidebailey.com and then type in like Wayfair or type in Laura Robichaux, it's on the page. So you can kind of see, this is not all of the page, but this is just the top part where we have the state, the effective date, the gross receipts, number of transactions, and then we have some notes. We keep this up to date pretty regularly, and we try to keep as much up to date knowledge as possible on it, just in case anybody's actually looking at it and you're trying to figure out, okay, what do we need to do next? Because of, you know, what's happened, what's been really hot this year, or I should say popular, is clients, companies trying to figure out, where do I have NEXUS? So we created a diagnostic. And this diagnostic, you can kind of see a little snippet of it here on the left side. We go in, my team will go in and we'll look at, different factors, and we'll determine, current state right now. Where should you be filing from not only a sales tax standpoint, but from a corporate tax standpoint, because you've really got to look at both tax types now. So this is just more of like you go to a doctor, you get a checkup, poof, this is what your results are right now. And then we work with you through this diagnostic to pre-plan for next year. Where are you getting close? Where are you touching the threshold on? What should you watch out for next year that you need to talk to your tax advisor about? Are you going to start putting people in different places, that type of thing? So we look at your future state, and then we bridge the gap between those two. So new for this year, I would say the biggest thing is companies getting more forethought about, okay, what do we need to do? Sales tax is everybody's, like fly in the room. It bothers everybody, but you still have to pay attention to it. What do we need to do? And from this diagnostic, we've been helping our clients with taxability determinations. That's what this snapshot is on this screen. We've helped, try to figure out, hey, if I have NEXUS in Alabama and I'm doing a training seminar, am I taxable? And then we include the citation. So that's the other big thing is, okay, fine. You get over the denial of, okay, I have NEXUS. And then the next question is, well, crap, how do I know if what I'm doing is taxable? And then what if I have to change my contract? And what if everything's all on the same page? And that type of thing. So what if my invoice, I have everything lumped together? So we've been helping our clients with this, which I would really suggest. If you're entering and stepping foot in new jurisdictions, just be really conscious of, and what we're doing taxable. So we've been doing a lot of taxability studies for our clients. If you haven't had one in a while, you probably need to do one. Just a couple thoughts from me before my computer kicks me off the internet again, is there's a lot of different ways to create NEXUS. So be strategic, always be proactive. If you ever want to brainstorm or just talk sales tax, I'm always available. I love to do that. Planning anytime you enter into a new state, and then be really open to investing in technology. Technology in places where you have growth and your company's experiencing at least 5% year over year of growth, the technology will help make your life easier. It doesn't replace people. It replaces the administrative burdensome stuff that you don't want to deal with in this new, current state of sales tax, or even corporate tax for that matter. And it will help with your sourcing. So your tax professional isn't, trying to sift through your numbers at the, when it's time to file. So let's hit our second polling question, and I'll read it if that's okay, Amy. When entering into a new state, what are at least 3 things you should be aware of? Okay. Oh, awesome. That's so awesome. Okay, good. Yes, technically it's number 1. SOS or Secretary of State, payroll, and use tax licenses. If you can hit those 3, you're doing pretty good. So now, because I've talked to everybody and everyone's so excited about sales tax, I'm going to kick it over to Kim, and she's going to talk about the ERP system.
All right, Kim, you now have control.
Perfect. Thank you, Laura. So now that we know about sales tax and what we need to be aware of there, we're going to talk about how an ERP system can help out companies with the sales tax collections and understanding of things in case of an audit or anything else. So one of the big things is a unified suite of to manage customers' projects, billings, procurement, items, and reporting. So what does that mean? Everything's in one database. It's a single source of truth. You don't have disparate systems to go back and forth on and think that you might have collected something in one system when in reality you didn't, things like that. Eliminating manual processes by bringing everything into an integrated system. So again, your warehouse and distribution, your fulfillment's happening in the same system as your accounting's happening in that same system. Being able to see real-time data. So you have your business intelligence with real-time data. From that real-time data, you can gather dashboards, have alerts happening, being able to bring analytics to the forefront so you can see it on a day-to-day basis. You don't have to worry about an end-of-month process to happen in order for you to see that data. If something's going to happen right away, you can see it that same day and take action on it. You can automate processes. So having built-in workflows, being able to automate those processes, enforce approvals. So one of the examples that we have a lot of times is PO approvals, being able to make sure that, you know, things are being purchased based on a budget, based on a threshold, and all the right signatures are in place to orchestrate that purchase. And then again, single source of truth for all your master records. So your customers are all in one database. Your vendors are all in one database. Your items are all in one database. So everything's being maintained in one single database. All right, so audits and controls. Let's talk a little bit about this. So one of the things that an ERP system can help with is maintaining your audits and controls. NetSuite in general, which you see a couple screenshots here, are able to log system notes in both each individual record, so you can see when things were changed, who changed it, how it was changed, what the old values are, what the new values are, as well as an audit trail on what's happening in the system. So the second screenshot you'll see here is that you can see, you know, records were being deleted. Again, when did they get deleted, who deleted them, why they were deleted, things like that. All of this stuff is going to help in any case that you might need for auditing and tax purposes. And then you can automate tax calculations. So some of the things here that we talked about with the master data and having a single source for all your master data is being able to set up taxes at the item level. You can set up whether or not that item should be taxable or not taxable. You can set up a customer if they should be taxable and not taxable. Based on that, when the transactions come in, it's going to do the automatic tax rate calculations at the transaction level and even at the per line item level to make sure that you're maintaining the right tax requirements per product and per customer. Reporting. So again, you can see reporting. So I can see revenue by state. I can see revenue by item. I can see all of this information right at my fingertips. So as soon as I log into a system, I can get access to that real-time data to help control and make sure, you know, am I hitting to a threshold where I need to start claiming taxes, those types of things. And then document retention. So we talked a little bit about that, and Laura mentioned having good documentation, being able to house the documents that you need right at the customer level. So if you see here at the customer level, you can have file attachments, and in this case, I have a tax certificate right at my customer level, so I can see, okay, I can log into the customer, and I can see any of my tax documents that I need to house here. And it doesn't end at tax documentations. You can house a lot of different types of files to different transaction records or to the item records or even to the customer records themselves. So polling question here is, an ERP system can help with building in a workflow that automates processes, orchestrates approvals, and enforces rules. True or false? Absolutely, that would be true. That again, having an ERP system just really helps orchestrate those things together, making sure you're automating processes to reduce manual work. When you reduce the manual work, you have less errors in place, being able to orchestrate those approvals and being able to enforce rules around all of your tax and audit requirements. So with that, I'm going to pass it over to Bridget, and she's going to talk to you about how Avalara can help as well with tax and your ERP system.
Around sales tax. So Avalara, for those of you who are not familiar with who we are, we have been around for over 14 years. We went public last year. We've partnered with Eide Bailly for over a decade. So great partnership here. We love working with Eide Bailly. Avalara has over 20,000 active customers. And one of our really key differentiators is our 700 pre-built integrations. And I think this is really important for the type of buying environment that we're all living in. It used to be maybe your business had one ERP system or an accounting system, but now you might have QuickBooks or NetSuite to run your store, and then you have a different e-commerce suite, and you have a billing system, and maybe you use Salesforce, right? So most companies now are using a variety of ERP and e-commerce systems, and Avalara basically integrates. If you've heard of it, we integrate with it. If you have a homegrown system, we have an API tool that you can build out that integration. We have a 98% customer retention rate. We process over 5 billion transactions per year and manage over 25 million exemption certificates. We are the industry leader for sales tax compliance. Let's quickly talk about economic nexus. So the states, as Laura mentioned, rely on sales tax revenue. And if you think about how you buy things, right, in this different e-commerce world, 30 years ago with the QUILL ruling, people were buying things in stores. And we had that ruling for 30 years. And now flash forward to today, think about the last time you went in the store and bought something, right, besides groceries. And even those you can get delivered to your house. And think about the last time you bought something on Amazon. I mean, I bet probably 10% of the people on this webinar might have bought something on Amazon while we're all talking today, right? It's just so easy. And you think, oh, I have to get this present for my kid's birthday party this weekend. Like, I'm just going to go on and do it really quick before I forget again. So people, how they've shopped has really changed. And because of this and that QUILL physical presence law, the states were losing over $13 billion a year from uncollected e-commerce sales tax. And that kind of brought us up to the South Dakota Wayfair ruling, which happened last summer that Laura talked about. And, you know, adding in this economic nexus to the physical nexus laws that already existed. So it didn't take away that, it just added in this economic nexus. Really important to note is this also applies to manufacturers and wholesalers who sell direct to consumers, because many states look at all sales, not just taxable sales. In fact, if you look on this slide in orange, these states report on taxable sales. So if you're selling into these states and you're a manufacturer and you think, oh, sales tax doesn't really affect me, you know, you better think about it again. So this map is showing, and it was really interesting to see this map change over the last year plus with the states adopting economic nexus. So now you can see it's, you know, basically been adopted in all the states. So when it comes to tax compliance, you know, Laura talked a lot about Nexus, but that's just the tip of the iceberg. There's also product taxability, the jurisdiction assignment, your exemption certificate management. Are you ready for the time of audit? And of course, state and local tax prep and filing. And any effort a business spends on this is really a non-revenue generating activity. You know, no one went into business to deal with sales tax compliance. So let's just quickly delve into these. So this is my trivia side coming out, Sales Tax Geek. We'll go over a few examples of product taxability. Bagels in New York, if you slice a bagel, it's taxable. But if you do not, if you just get a whole bagel, it's exempt. And the reason for this is slicing a bagel adds a service to that bagel, and services are taxable in New York. Another quick example are donuts in Texas. If you have less than 5, they're taxable, but if you have more than that, they're exempt. This law also applies in California and Arizona. So if you're going into a Panera Bread and you're buying something to go, you won't have to pay sales tax on it. So similar here with the donuts, they're thinking if you have less than 5 donuts, these are to go and you don't need to pay or sales tax. But if you have less than 5, they're for there and you do. So these are just a few examples. And the reason for this is if your state or city raises your sales tax rate, you'll know, right? People will be mad, it'll be in the newspaper. I live in California, like, my God, can we really pay any more taxes? So if they all of a sudden start taxing Netflix, which is a new product that, you know, has been out there, or, you know, the next new app that comes out, if they put a tax on that, people won't really know as much. And this is a way for the states to generate more revenue. And that's why there's so many thousands and thousands of varying product taxability laws out there. Again, the jurisdiction assignment, there's over 12,000 US sales tax jurisdictions, especially in Colorado and Louisiana. These boundaries may overlap. Many people think of sales tax in terms of zip codes, but as you can tell here in the 80111 zip code, there's 4 different sales tax rates. So using this zip code would never give you that accurate rate. And you also need to deal with your exemption certificates. Employees find these difficult to collect. It might be a salesperson out there that's collecting the exemption certificate, and you know salespeople, right? They're not going to know what to look for, and they're not properly trained. So how do you know you're getting that right certificate back? And really, a single missing certificate could cost you much more than the taxes you failed to collect. And the auditors know this and know these are the low-hanging fruit. So if you're dealing with a lot of exemption certificates, make sure you have a process in place to handle these. And of course, the state and local tax prep and filing. Maybe pre-Wayfair, you had a business in California and you were selling into all the states, but because you never left California, you just were only paying sales tax in California. But now with Economic Nexus, you might have to collect in 30+ states and file and your state and local taxes there. And you can imagine moving from one state of filing to multiple states, just that work compounds. And that's when it's really not worth it to do it yourself, and where automation is key. And of course, being ready for the time of audit. Now is a great time to get compliant, but in a couple of years, from listening to Laura over this past year, the auditors are really going to come in heavy-handed probably in 2 years from now. So make sure you get compliant now so that when they do come and audit you, you are ready to go and have all your information easily accessible. So because of all of this, why do companies outsource sales tax? Probably by now you've seen how complicated sales tax is to deal with. And from an Aberdeen research study, 75% of businesses think an auditor is likely to find a mistake. Just thinking about that bagel example, how would people ever really know that or be able to keep track of all that product taxability? And that's where the mistakes really come in. And obviously, sales tax audits are not fun. 56% of companies have found that the cost of an average sales tax audit is over $50,000 when you add up, your time spent and penalties and back taxes as well. So why think about automation? Obviously now the main driver is Economic Nexus, right? And some other rapid growth triggers are, that 5% year-over-year business that Laura was talking about. That's a great time to think about automation. If you're adding in new geographies or new products, I talked to a company just this week that they had been selling B2B and now they're adding in a business to consumer product. And they said, we really, we had it under control and now we just want to make sure we're in compliance for this new product line. Anytime you're implementing a new ERP system, maybe you're going from QuickBooks to NetSuite, that's a great time to look at also automating your sales tax compliance. If there's any mergers or acquisitions going on, this is a good time to review your process. Avalara just put out a white paper on sales tax compliance for M&A. So if you're interested in that, feel free to email me or ask Eide Bailey and I can get that over to you. And if there's a new hired CFO coming in, or if you've been through a sales tax audit, lots of those people are always ready to look at Avalara. So let's quickly review Avalara's solutions. How do we address these challenges with sales tax? So for Nexus, in the Avalara console, you can add in Nexus jurisdictions just by moving your mouse. So if you're moving from California into 10 states and you're using Avalara, you would just go into the console after you've registered with the states and add those in, and Avalara will start calculating sales tax for those new jurisdictions. Product taxability. We have over 100 people at Avalara, and all they do is study the rules and rates of product taxability. Our information is so accurate that, in fact, many of the states use our information as their own. So, we have all those rules built in the cloud, and they are up to date. Every month we update them to make sure you have the accurate information. The jurisdiction assignment, Avalara calculates the sales tax rate based on the exact address from the ship to ship from address to that exact address. So going beyond that zip code. And if you don't have an address, let's say you're in an oil field or maybe delivering something to a farm, we can calculate it based on lat long as well. Exemption certificates, we have a whole solution that will automate exemption certificate management. and handle the state and local tax prep and filing, all automated. So if you have anyone doing that, they can go on vacation and don't need to be tied to their desk. And we have tons of reports, so this information is easily accessed in just a few clicks of a mouse. So to review, AvaTax validates the address, applies the sourcing rules, assigns the jurisdiction, right? It'll see if it's exempt, identify the product taxability, did we slice that bagel, and verifies for any tax holidays, and then sends that back to store for future remittance. So just to quickly review our product, AvaTax is our calculations tool that calculates the rate. Then CertCapture is our exemption management certificate tool. And Avalara Returns is the filing tool. So AvaTax and the returns are usually bought together to automate that whole process. So similar to outsourcing payroll, you can outsource your sales tax compliance. Okay, and we have new economic nexus notification as well. So you'll be notified if you are approaching economic nexus in other states. We also have a solution for manufacturers, and I'm going to kind of run through these slides pretty quick because we're running 3 minutes to go. So manufacturers have kind of different struggles than other people with sales tax. And really, their main problem is with exemption certificates. So exemption certificates are the same thing as cash money. Missing an exemption certificate can cost you thousands of dollars in an audit. And this is from our customer, James at Northern Tool. That just kind of shows you how important it is to have these exemption certificates. And you can automate that whole process with CertCapture. It's a great document management tool that can be sold standalone or in conjunction with AvaTax. We also have free sales tax services through the SST states. So if you have gone from one state into these 24 states, you know, contact me after and we can see if you qualify for these services. Avalara is a certified service provider of these services as well. And there's only a handful of sales tax solutions that are. If you're dealing with VAT or GST, Avalara can handle that. We have consumer use tax product, a cross-border product, which we're seeing, you know, more people need more and more. And if you have thousands of UPCs, we have a tool that can map all of those for you. We also have an excise solution for fuel tax. Got to build out this slide. So if anyone's dealing in excise, we have a solution for that. And if you're in the telecom world, we have a communications tax service. And if you maybe have a VRBO or Airbnb, we have a solution to handle all those lodging taxes as well. And this is really affordable. So if you have that on your own, you know, check that out on our website. So now we're to the fourth polling question. How many billions of dollars are left uncollected sales tax revenue from e-commerce? 30 billion, 13 billion, 10 billion, or none of the above? So the results. I think it was 13 billion. Yep, 47% got that right. A little bit tricky, the threes in there. Tricky polling questions today. Okay, so with that, we've come to the end. I think we actually don't have time for questions, but I'll toss it back to Amy to see if anyone does have questions. You know, feel free to email me if you have any questions about sales tax. I'm here to help.
All right, well, I don't have any questions that have come through right now, but if you guys do have any questions at all, you can see our presenter's contact information on the screen, and it's also in the email that was sent out to you. So thank you all so much for attending, and thank you to our presenters, and everyone have a great day.
Thanks so much. Bye, everyone. 9:19. Bye.